Hey guys, welcome to another video. In today's video we are going to be going over my FTMO strategy when we come up against a trending market. So just before we begin, make sure to smash that like button and subscribe to my channel. Also, I just want to say, just before we get started with this video, I have started backtesting live sessions. So I'll be backtesting GBP JPY during the London session live on YouTube. So come and watch me do that at 8 to 10 p.m. GMT time every Tuesday, Thursday and Sunday. So since this video is a part 2 to my previous video, I strongly recommend you go back and watch my previous video and then come back and then watch this video so you are on the right track and you understand what's going on. Okay, so let's get straight into the video then. So when we come to the market for the London session or the New York session or the Asian session, sometimes we don't come into the market when price is ranging and we are waiting for a retest or a breakout and a retest. So what we have to do is we have to be able to adapt our trading style to markets that are already trending in a certain direction. So either trending to the upside or trending to the downside. So when price is trending to the upside, we should see some sort of structure that looks like this. So price moving up and down in a zigzag pattern, creating higher highs and higher lows as it goes up. And this is what we call an uptrend. So this is just simple trend analysis. And then when price is trending downwards, we should see something like this, where price is moving down, creating lower highs and higher lows. So when price is trending down, we should see it create lower lows and lower highs. So lower low, lower high, lower low, lower high as such. And so what we're looking to do is we're looking to take advantage of the trend that we are seeing to take a trade. So here are some examples of me taking trades based on a trending market before I get to the London session. On my screen you can see that there is a screenshot of a trade that I've taken previously where I've done some analysis, so feel free to pause the video and read what I've written. Looking at our first example, we can clearly see that price is in a downtrend. Just from here, price is making a low here, making a lower high and a low again here. So when price creates a low, what we are looking to do is we are looking to exploit the fact that it forms a support and then breaks the support. So for example, if we look over here, it's formed a support, pushes up, comes down and breaks the support. So we look to take an entry around here as it breaks the low of the bullish candle and then take an impulse entry to the downside. Now, since I've always said to you that we take an impulse entry for the London session at 7:30 to 8:30, we need this candle, the breakout candle, to be in that time frame, and so I think we do get it. So price pushes it was this candle over here, price pushes down, it breaks the low of the bullish candle, so we can enter a trade with stops just above this candle here, and we take it to our first target and then to a second target with our runner. Now let's move on to our second example. So in our second example we can see something like this. So price pushed up like this and it was trending upwards for some time in the Asian, just before the Asian session. Then during the Asian session it starts to push down, and look what we can see. We can see some sort of stairway pattern. Now we can also have a pattern like this, which is also a trending market pattern. It's just on a smaller time frame where each candle represents the zigzags essentially. And so we can see price forms a low, it breaks the low, comes down, forms a low again. And we're looking for price in our time frame to break this support and give us a signal to take to the downside. And at 7:30 to 8 o'clock, our candlestick gives us the entry requirements for an impulse entry during our volume time frame. So we can take our impulse entry, stops just above this candle, and target down with a precursor target of around 10 pips and a runner running on. As we can see, in this particular trade, our runner would have got stopped out from this candle, and that's it. But we still make our initial 10 pips, which is perfect. And we can see that price afterwards, after the trade, it came back, retested this support as resistance, and then continued down, similar to our zigzag pattern that I mentioned previously. So now let's have a look at an example where we don't get an impulse entry, but we can still leverage the fact that price is pushing down. So we can see that price comes to this area here, so it is in a bit of a range, but we can see that price is trending downwards. Okay, so because price is trending downwards, so we get a down leg, we get push up, and then we've got a second down leg. So we can see that price is potentially going to break this support. Now, we do not get an impulse entry because this trade comes after our time frame, so we are unable to take a trade. I think it came about 8:30 to 9 o'clock this trade was, so it was just late. But what we can do is we could take advantage of that. So this candle here, we can see, so this candle closed as well in such a way, but it was a bit of a weak close because it looks like a very weak break of this support. So what we can do is we can just wait, right? Because in my head, you know, no trade is a good trade, right? Because if it goes in your direction, then you are right. If it doesn't, then you can learn from it, and it's a free lesson to learn from. So here what we do is we wait, we get this candlestick here that closes a strong bearish candle, and it fits our entry requirements with a 10 pip or around about 10 pip stop. We take the trade and we can see that price pushes down, hits our first target, and then we would have had our second target with our runner hits as well, which was another good trade. And what we did was we saw that price was in a small range, but we could see that price was also in a trend to the downside as well. And for my final example, we have the same sort of scenario. Now I did try to find some examples of price trending upwards, but I was unable to do so because recently from my journaling I just don't have any, and I wanted to show you some recent examples of this happening on the charts. So we can see prices in a downtrend as such. It's moving downwards, it forms a support, then it forms a resistance, and then prices coming downwards. Now, we're not in that time frame that I always talk about, so we can't take an impulse entry. And so what do? We just wait for candles to close. So we take this close here as price breaks this candle, stops just above this candle, and price pushes downwards to our target, hits 10 pips, and then our runner gets hit as well at 17.8 pips. So as we can see, that trading a trending market is fairly easier than trading a ranging market. We don't always get these trades. You could have seen from the timestamps that I've showed you, 18th of January, 23rd of January, 17th of February, 9th of February. Those are all the dates that we've had trades like this so far. And so we can see that these trades don't come often, but when they do come, they are a blessing in disguise because it actually makes it easier for us to take a trade, as we already have a good idea of the direction the currency pair wants to move in. So when we come to the markets and the markets are trending, we can actually use this to advantage to gain as much pips as possible and increase that percentage return that we can make from that trade. So how can we do this? So as you've noticed from all these trades that I've shown you, the running targets have been hit. So one example, it's been hit here. The runner target did not get hit here, but here it's been hit, and here it has also been hit. So we can see that there's a higher probability of our running targets being met if the price action is trending before we reach the market for the London session, the New York session, or even the Asian session. Although the Asian session is a very slow session, I think price doesn't tend to trend during that session. But for the New York session and the London session, we can actually close less of our position off at 10 pips and have runners running with a higher percentage. So you can, scale that down to maybe closing 60% at 10 pips and having 40% run, or whatever you're comfortable with, as it allows you to maximize your return from that trade. So in terms of the time frame you're looking for price to be trending in, it's not just one time frame. You should be able to spot a trending market from many time frames. We don't want to go up to too high of a time frame, so we don't want to be looking at the daily time frame or the 4-hour time frame. We want to take advantage of the 1-hour time frame, the 30-minute time frame, and the 15-minute time frame, as those are the time frames we will be looking at very closely, and those are the time frames we will be taking a trade for, because we don't want to be in a trade for too long. For example, an hour or more than an hour. We want to be in a trade for around 15 to 30 minutes. If you have any questions about anything that I've covered in this video so far, please don't hesitate to drop a comment in the comment section asking me a question, and I'll be happy to answer those questions for you. If you'd like me to cover anything in particular, just drop a comment in the comment section below and I will be happy to go over that for you. But that's it for today's video. Make sure to subscribe and I'll see you in the next video.